This is a grassroots financial revolution that starts from the ground up. This is a profound revival of faith and belief that breaks the traditional center. Chaos is merely the beginning of a brand new order, and collapse is nothing more than the final curtain call for the old paradigm. In this new world, code itself is the ultimate law. The crypto world returns true sovereignty to individuals and lets computing power redefine and reshape the very foundations of trust. Welcome to CryptoTalk. Kevin, what are we talking about today? What do you think? Should we talk about Bitcoin? I think talking about the exchange sector is more topical. For you maybe, but not for me. Are you feeling pressured? All right, then let's not argue. Let's flip this coin. If the Bitcoin side faces up, we'll talk about Bitcoin. If the exchange side faces up, we'll talk about exchanges. Okay, let's give it a try. Gate Bitcoin, gate Bitcoin, gate Bitcoin. Gate Bitcoin and gate Bitcoin.
Gate. Well, honestly, that is actually quite funny.
I won gate, now it's your turn. Is there such a thing as best 2 out of 3? No way, just like trading. Let's settle it in one round. Winner takes all. All right, you're right. A limited space, an unlimited world. You are now watching the first season of Secret Talk, Hong Kong Special Edition. In each episode, we invite different guests to chat with everyone in a talk show format about topics like what Web3 is, how to make money on Bitra, how exchanges manage risk, and other topics you care about. We want to thank Gate for sponsoring the entire first season of Secret Talk. There's a QR code on the screen. Feel free to scan it to download the Gate exchange. First, let me introduce a new friend, Teacher Dudu. Dudu, your show is called ROG Video. Wait, is it ROG Radio? That name is pretty bold. Can you tell us what ROG Radio mainly does?
ROG Radio is primarily an English language media outlet. Right now, we have 2 brands, ROG Radio and Decrypt. At the same time, we also have a prediction market called Myriad. It originated during the previous NFT bull market, the era of free mints. Back then, we noticed that many founders of small PFP projects would often go on ROG, so we chose this name. Plus, our president and founder has French and Persian heritage. He's a Persian Frenchman. When you mention Persia, everyone thinks of Persian carpets. So we combined these 2 elements and came up with the name ROG Radio.
People who dare to laugh at themselves are the strongest. Let's welcome our old friend Kevin, the CBO of Gate. Hello, Kevin. And also our old friend Vito, the founder and investor of Metara. Hello, everyone. Today's topic is closely related to you, Kevin. Exchanges. Today we're going to talk about exchanges, something everyone both loves and hates. Why do we say it's a love-hate relationship? Because your first encounter with BQR is definitely related to an exchange. Whether you're buying spot, trading futures, or even being introduced by a Ponzi scheme, you will definitely download an exchange. So, which was the first exchange you ever used in your life? I think it determines your initial stance or the way you entered this space. I'd also like to ask our guests, what was the first exchange you ever used for your very first trade? I think it's quite interesting. Let's start with our new guest, Mr. Dude.
My very first trade was actually on the old Huobi. After cashing out from my previous startup, I went all in on the ICO industry at the urging of a friend. When I first entered the space, it was a process of paying tuition, so to speak, and doing ventures. Looking back now, it's clear that primary market investing and VC are really tough. But back then, it was still early and I didn't really understand the industry. So I took the US dollars I got from selling to a listed company, converted them into Ethereum, and then needed to deposit the Ethereum into an exchange to trade. That's when, through a friend's introduction, I got to know Huobi.
So your first exchange was Huobi?
I used it until the withdrawal ban.
In China, Huobi was definitely very good. And then Kevin...
My exchange was already gone. Back in 2013, when I bought Bitcoin, it was still only 140 yuan. A lot of people might have heard this story, but they probably haven't heard how I bought it. At that time, exchanges wouldn't accept your credit card, so I looked for an exchange that would accept PayPal. But even with PayPal, they wouldn't let you buy Bitcoin directly. Instead, you had to buy a kind of points card on their platform, and then you had to convert it again
Platform token.
Yeah, a platform token. Back then, the concept of platform tokens didn't even exist yet. So it took me a really long time just to buy a tiny bit of Bitcoin. But this also shows that 2013 was right after 2012, which was when all the old established platforms started. So it's been a really long journey to get to where we are now. The exchange I mentioned earlier doesn't even exist anymore, so for Gate to have made it to today is really impressive.
Yeah, it's survived until now. I recall a Hong Kong exchange called CoinCola. Still around?
I think they're all gone now.
You mean trading with Hong Kong dollars?
All the ones that used to be in Hong Kong are probably gone now.
To be honest, the first exchange I ever used was actually Gate. Back then, it was called Baider in the very early days. After I bought Bitcoin for the first time, in 2016, the first exchange app I downloaded was Baider. Later on, the reason I had such a good rapport with Mr. Han is because I've been an old user for so many years. Actually, this show came about because last time I met Mr. Han in Tokyo, I told him, why is it that after interviews, people just leave right after the questions with no real communication? I told him a talk show should be done differently and our presentation should be like this and that. He said, all right, let's do one right away. And that's how this episode of Secret Agent that everyone is watching came to be.
This happens quite a lot. At offline events, when people come up to us, many of them say that Gate was the first exchange they ever used. Maybe it's not the one they use the most now, but for a lot of people, the very first one was Gate or Baider.
Yes, that's right, Mr. Peter.
I can't even remember which education pool I first used because I invested in several before entering the industry. Before that, I was working on H1 funds for mutual funds and was a mutual fund manager. Later, I entered the industry by understanding cash flow through mining. I started by mining Ethereum without any particular belief in it. At the time, I think the returns were incredibly high. I remember Ethereum was rising from tens of RMB to 1,600 RMB from the end of 2016 to the first half of 2017. We broke even every 10 days or so while mining. Actually, the price of the coin was skyrocketing, but we didn't know that. We just thought the returns were terrifying. So I remember we connected to this mining pool. The rewards based on your computing power percentage from the previous day were distributed at a fixed time. Back then, as soon as we received the coins, we rushed to the exchange to sell them. We mined and withdrew, then sold. We had no faith in this. We thought it was bound to collapse because it was so profitable. Definitely a Ponzi scheme. That's how it was in the early days. So I don't remember the specific exchange, but there were several. Okay, I'm sure we had them downloaded. There was also China Bitcoin, not Bitcoin China, not Yang Linkes, but Buy China Bitcoin, right? And Li Xiaolai's Yunbi.com. These were the three exchanges. It was funny back then. Even though they were all domestic and traded in RMB, there were still price differences. So why mention these three? We just went for whichever had the highest price and rushed to dump it. So at that time, our small team was just mining, so we downloaded this batch of exchanges. Our first experience with exchanges was simply as a place to cash out our liquidity.
So when it comes to exchanges, this is a sector that everyone has to interact with when they enter the space. The reason we say we have a love-hate relationship with exchanges is because their functions are just too powerful. You can buy spot, trade contracts, buy futures, use leverage, take out loans, use collateral, and even do wealth management. All the financial services are available on exchanges. Plus, they can set their own prices, so they're both the player and the referee. That's why people wonder if centralized exchanges might have some risks, and I think I have some authority to speak on this.
There are indeed risks, but perhaps the ultimate question is, some people from a God's eye view would say, aren't we supposed to be in a decentralized world? Why do we need a centralized exchange? I think it's because the Web3 space has become so big now, with so many different application scenarios. When Satoshi Nakamoto first envisioned this, it was just a coin, a blockchain, and on the blockchain you had various benefits and advantages. Decentralization is just one of them, like being open, immutable, and operating globally 24/7. In the crypto world, some projects only leverage a few of these advantages, maybe 4 or 5. Centralization means it's not decentralized, but it also brings other benefits, like 24/7 operation or other features. So I think at the very beginning, this wasn't really considered. Let me add one more thing, not just about exchanges, but think about stablecoins. Stablecoins, right? Because when Satoshi Nakamoto started, the idea was, you don't want to use the US dollar, then here's Bitcoin.
Yes.
But what he didn't anticipate is that now the biggest application scenario is stablecoins. Stablecoins are pegged to the US dollar, and this is also a form of centralization. Take USDT, for example, which has a team behind it. So at the very beginning, even he himself didn't foresee this aspect. That's why in the crypto space, we shouldn't just cling to the single concept of decentralization and say that anything centralized is bad.
I think centralized exchanges still have a clear first mover advantage. These exchanges and trading platforms that are backed by national credit are actually the most reliable under most circumstances. In this case, while decentralization is certainly fairer and more forward-looking, in reality, those of us in finance still tend to choose platforms with extremely high credibility, even, as I just mentioned, those that are the most reliable for investment and trading. So I believe centralized exchanges have two main first-mover advantages. One is that their credibility is truly very high. I've personally experienced some incidents myself. Previously on Huobi, related to my dealings with Decoin, I sold my company, a fintech startup, and exchanged the United States dollars cash for Ethereum, which I then transferred into ARM token. At that time, I needed to deposit it into an exchange, and when copying and pasting, I made a mistake that beginners often make. I pasted the wrong address. Because I first tried a small test transaction, I ended up copying and pasting the withdrawal address from Huobi. I remember it very clearly. Over 7,000 ETH were transferred to Huobi's withdrawal address.
Hot wallet address, 109 RMB.
Using a hot wallet, I waited 15 minutes for my funds to arrive. When they didn't, I realized I'd sent them to the wrong address. This leads us to centralized exchanges.
Go seek help.
I contacted my VIP customer service, then reached out to Huobi's executives, and eventually even got in touch with Li Ling. Back then, exchanges weren't as developed and mature as they are now. Their internal and external financial systems still had many issues, and a lot of things required manual management. Nowadays, I know many use automated systems or outsource to specialized companies. In the end, of course, I got my funds back. So this experience shows that exchanges, especially top-ranked ones like Gate, have a high level of credibility, which is extremely important for asset security. The second point is about service. For Chinese users, especially on centralized exchanges, the service is outstanding. You could say it's 24/7. The service is really excellent at these exchanges. Having experienced traditional securities exchanges like the NYSE and CME, you'll find that crypto exchanges offer service that is extremely spot on and very prompt. There's also a little story. When CZ first started Binance, I know he actually received some help from mutual friends of ours. At that time, I had a friend who was the head of tech at Morgan Stanley's Shanghai office, because Morgan Stanley has a fairly large tech center in Shanghai. It doesn't just serve China. Its main focus is actually serving the global market. However, because the IT talent there is relatively cost-effective, so the few hundred people there are extremely professional. At that time, since we all knew each other from working in traditional finance, when Balance was just getting started, he asked our friends to bring in some staff for technical support, and even the simplest things like call centers, customer service. Yes. Some real technicians even worked as customer service. There were even some who used to answer phones at Morgan Stanley who were also doing call center work.
They solved tech issues.
Right. They also had to handle technical issues at the call center. Later on, of course, a lot of this was outsourced to other people, but in the very beginning, they really did have it in-house. After getting this kind of support, it became very obvious, because at an exchange, the quality of your service really stands out, especially for newcomers or big clients. In recent days, I think centralized exchanges have been doing an excellent job and are still competing fiercely. Even in this cycle, you can see a lot of KOL-led training camps, as well as many
varied and creative approaches.
Service levels have become highly competitive.
Customer service voucher security is a big concern.
I think exchanges are inherently necessary because trading is a fundamental human need. For example, when I mined Bitcoin, I naturally wanted to cash out, so I needed a place to trade. I believe exchanges exist because of this inherent need. The earliest exchanges might not have been as powerful or credible as Professor Duru mentioned, but they still existed. Like me, I didn't use them in the early days, but I heard the story of the first exchange in China, Yang Linke's Bitcoin China. In the early days, money was deposited into Yang Linke's personal bank account. Back then, bank restrictions weren't as strict. Now his personal account is long gone, but back then, bank restrictions weren't as strict, right? They've opened many bank card order placement services, but the transaction experience isn't great, and the response time is slow. However, it has continued to develop despite this. The demand for trading is very strong, and trading itself is indeed very profitable, right? Money can support people. After making money, everyone starts upgrading their equipment, right? They start buying trading vouchers, service vouchers, and all sorts of things. But I think the initial existence of exchanges was because in the financial field, for something to have vitality, it either needs to improve financial efficiency or reduce financial costs, right? For example, an exchange is a centralized trading venue. It actually reduces the cost of finding trading partners significantly. Otherwise, if I had a house I wanted to sell to you, wouldn't you have wanted it
Back then, I managed to find a professional company based in Dubai that specialized in regulatory compliance.
OTC services.
Before it was called OTC, they were just compliant cash deals. Clients were mostly entertainment groups, but they prioritized compliance.
This also reflects efficiency because everyone's funds are concentrated here, so price depth and price discovery happen very quickly. For example, if I quote you a price in a trade,
Quoting, I know if price is high.
even back then, in the early days, there were price differences between exchanges, but when people traded offline, it was really a question of how to set the price. In fact, exchanges are extremely efficient at financial price discovery. Even in their most basic form, like the old bulletin board quoting system, early markets would just write prices on a blackboard, but they still fulfilled the function of price discovery. I think this is an inherent need. Now, whether we talk about decentralization or the problems of over-centralization, in the past, there was no Ethereum or on-chain capabilities. Those features only came much later. Now, there are indeed many good decentralized trading methods like swap or hyperliquid, and the on-chain contract derivatives trading ecosystem is gradually emerging. So I think the system will evolve and develop. But in the early days, centralization was the only option. There were no smart contracts, nothing to support decentralized trading, so everyone had to use centralized exchanges. And because they were so efficient and had such obvious advantages, they captured most of the early profits in the industry. I think even now, the most profitable businesses in the industry are still the exchanges.
Speaking of making money, exchanges can earn profits just from transaction fees. They charge fees on both sides of the trade. We'll talk more about that in a bit. First, let's discuss what exactly we trust when we put our faith in centralized exchanges. Let me ask everyone here a question. Let's do a quick survey. The funds you keep on exchanges, let's count them in USDT. How many digits are we talking about in total? Let's see what level of trust you all have. Over 8 digits, right? Over 8 digits. For me, it's about 7 digits. You too, 8 digits.
I don't have that much. Like I said before, I only transfer funds to the exchange when I'm actually trading, so it's about 5 or 6 digits for me.
6 digits is still 100,000. So when we trust centralized exchanges, what exactly are we trusting? Is it the boss behind the scenes, their trading system, or their risk control system? What is it that we really trust?
That's actually a really good question. I think it's something we need to reflect on regularly, especially after what has happened in the industry.
Black swan events.
All sorts of exchanges running away with users' funds or being shut down by law enforcement, and even huge incidents like the FTX crisis in Hong Kong. I personally invested in FT as well.
At that time when they left Hong Kong, I wasn't there.
Of course, now that Bitcoin has come back, the equity I invested in FTX still has people quoting prices for it, and even the Ethereum I had stored there still has buyers. In fact, because FTX's liquidation offered us a relatively low price, it really makes you reflect on what it is we actually trust about exchanges. It's always a balance between trust and convenience. I think for people with different levels of assets, the way they trust exchanges is different. For those with less than 100,000, they don't really need to think much about it. They don't really care about the brand of the exchange or anything like that. They just go wherever there are better trading opportunities or better chances for new token launches or where the fees are lower. But for those of us who got into crypto relatively early, like many people here today, we do need to consider whether we should spread our assets across several exchanges. Last year, Bybit also had a major incident. Although the brand is strong and well-funded, and in the end they resolved it themselves, exchange hacks are something for which, in our industry, there still is not a 100% effective solution. Even Binance, and I know among the top 10 exchanges, 2 of them were actually founded by my business school classmates, so we all know that last year there were even bankruptcies involving amounts over 8 figures in US dollars. When these things happen, it seems that apart from the founders' own credibility and wealth being used to cover losses, there really is not a good solution. So centralized exchanges definitely need to keep investing in and iterating on security. Personally, I think what we trust most is the brand and the founder.
This is a similar dimension. It's basically the same set of criteria, but sometimes it can be pretty superficial. Just looking at the most obvious indicators, the biggest, the largest, right? You think it probably won't go under, right? You check Mocha Tree? No, you definitely have to check that. But actually, that only became available after I'd already put my funds in. Before, there was no such public information from Moco. But it's still pretty superficial, just looking at which one is bigger, right? And that also implies better credibility. Large exchanges actually have another layer of credibility. They don't have the subjective motivation motivation to do bad things. With small exchanges, it's not just about getting hacked. They might realize they can't keep operating and just run off with your money, or they might fabricate something and take your assets. So being hacked is possible, but the motivation to do bad things is still there. For a big exchange to motivate them to do something like that, the motivation for this kind of intentional wrongdoing is actually pretty weak because they can make money just by doing business as usual, right? So that's one reason to trust them. Another thing is, after FTX collapsed, for a period of time, I actually kept most of my assets off exchanges. I was worried about the legal environment at the time because after the FTX collapse, US regulators had already started targeting these big exchanges. They were already taking action. Back then, I was concerned about systemic external risks caused by legal issues. Sometimes the world just doesn't operate according to reason. For example, take the classic case. Even though we say the US is a society governed by law and values rules, when Silicon Valley Bank collapsed, only Americans could get insurance payouts. People overseas didn't get compensated, right? So if an exchange is inevitably taken down by the US, then US users will get direct compensation while the rest will be confiscated by the US Treasury, right? We're talking about hundreds of billions of dollars here. So at that time, based on this consideration, there was a period when I really didn't dare to keep my assets on any centralized exchange. But after things settled down, I still moved a lot of assets back, partly out of laziness and partly because self-custody doesn't necessarily feel safer. Especially when your holdings reach a certain size, hackers can track large wallet addresses. And if you make a mistake in your operations and leak something, that could also lead to losses. So both sides have their own risks, and I've experienced both.
At our mining farm for the large Bitcoin storage address, we use a cold wallet. For example, when we need to process a client's withdrawal, after just one withdrawal, you'll notice all kinds of attacks. Even if you're transferring from a cold wallet to your address, there will be tiny amounts sent to you, like 0.000 something BTC, which you can't withdraw.
At the very least, it makes you break out in a cold sweat and you realize just how
so many people are watching you, targeting you.
We've seen stories around us where people lost their money because the project founder ran off, but there are also stories where people lost their money due to improper storage of their own cold wallets or hot wallets and so on.
So Vito said, forget it. No matter where you put it, you'll end up losing it anyway.
Dab it everywhere, it works.
Yeah.
Just like Dudu said, you evaluate some conditions, rule out some of the more extreme or malicious possibilities, and that's about it. It's actually pretty superficial.
The only reason I keep my funds on exchanges is honestly just laziness. First, it's really just that I'm too lazy to transfer to a cold wallet and then transfer it back again. Second, how is this trust built? I've always believed that all centralized exchanges, whether it's Binance, HKEX, whether you're ranked number one or the lowest, or even Gate, all centralized exchanges carry the same risk in my eyes. It's the risk of people, the risk of private key management. It's all the same whether you're using multi-signature or relying on some third-party audit company. I think the risk factor is the same. So why do I choose to trust an exchange? Where does that trust come from? It really comes from the fact that I've met the boss in person. I've had New Year's Eve dinner with the Gate team. We've met in Singapore, in Shanghai, in Tokyo. I know what this team looks like. I know what kind of person is behind this system, whether he's reliable or not, whether I can entrust my assets to him. This confidence is actually built up bit by bit through personal understanding. So this risk is also a human risk. That's why I think all centralized exchanges are essentially a human risk, depending on how you see it. Even though you work in the exchange industry, he's the one who thinks about it the least. It's really all about people.
This is a very paradoxical issue. In the crypto world, it's not that we're trustless and don't need to trust anyone. It's just that the public blockchain and the system are fine, but we still can't avoid this problem. What you just said is right. People come first, and time comes first. I'm not avoiding the topic, but I still want to say it. The stablecoin USDT wasn't compliant at the beginning. You didn't know if it had any reserves behind it, right? But it didn't collapse after a cycle, so people trusted it and everyone used it. We've been around for so many years, and I've been saying this all along. You still see Mr. Han and me. It must be a proof of resilience, but that's not enough because this is still a victory. I think the final topic of today's program won't be this, but I still have to go for compliance. Compliance means you don't need to trust me. You trust Zhang Guan. If there's a problem, Zhang Guan will come to me. If you still want to have dinner with me today and I'm still here, and when I come out, you'll know we're fine. In the end, it's about endurance. And it's not just about compliance, but also about the reform of education. You also need to see if they've squandered the money. So I think centralized exchanges can show you more. You can see what people are doing, what brands are doing, and how you get credit from them.
So what centralized exchanges rely on is the trust that all users have in the exchange's brand. For all the newcomers who have just entered the market, we need to popularize a concept. When your coins are stored in an exchange, you need to understand that these coins are not actually in your hands, but in the hands of the exchange. When you swap Ethereum for USDT in the exchange, then USDT for Gate's platform token, and then swap the Gate platform token back to Ethereum, and so on, your exchange process actually doesn't go on-chain. It's just a point system within the exchange, a balance system of points. There is no on-chain friction generated. Only when you withdraw coins from the exchange to your wallet or to another exchange does the exchange interact on-chain and transfer your funds to another address. But during the internal points exchange process, customers have to pay a fee for every transaction. For example, let's say the fee is 0.2%. Whether you buy or sell, you have to pay a 0.2% fee. In this context, if I trade one Bitcoin 250 times within the exchange, the Bitcoin essentially belongs to the exchange. The exchange has already earned one Bitcoin. So from this perspective, can transaction fees be lowered? Are transaction fees really a huge profit? Is this the most profitable part for exchanges or not?
It is indeed the main source of profit, but if you look at it, the necessary transaction fees compared to other types of transaction fees nowadays are already extremely, extremely low. Yes, very low.
What is your transaction fee rate?
It depends on your VIP level.
Right. If you don't use our QR code to download, what is your transaction fee rate?
Right now, I'm not exactly sure about the required fee, but when you first join, there might be some silver tier discounts, like you might already be at VIP 3 instead of VIP 0 from the start. As for transaction fees, speaking in terms of the crypto world now, institutions care a lot more about those fees, while retail investors don't pay as much attention. They don't trade that frequently. For example, if I buy this coin and it goes up 5 or 10 times, I don't care about the small fee. I just let the exchange take it. But what's good about coming here is that, unlike on decentralized exchanges on chain, where you have to check which chain it's on, transfer your Ethereum to Solana, then go buy, and sometimes you can't even get the price you want, we're still providing convenience for them. So charging a transaction fee is justified.
A reasonable rate, I think, is around 0.2%. As far as I remember, it's about 0.2%.
Right now, it's pretty much on par with the stock market, but the stock market took 30 years to get to this level, whereas in crypto, it probably won't even take 10 years.
Because transaction fees are a key weapon in the competition between exchanges. Let me ask Mr. Duduo, a high roller with 8-figure assets. Do you care about transaction fees, or what's your view on exchange fees?
I actually don't mind the transaction fees that much.
What do you think is the most profitable part that should be earned?
Because I'm not a particularly high frequency trader, I mostly do trend trades. Regarding the issue of large transaction fees, I often find that some industry friends, even those with relatively small capital, have transaction fees far exceeding mine. This is because the crypto market is an industry I extremely enjoy risk-taking, and leverage tools are so convenient. In this situation, many people haven't received professional financial investment education and don't know what restraint is. Transaction fees are a major concern for them, as well as for the quantitative trading institutions Kevin mentioned earlier. I think it's definitely necessary to customize solutions for them. But the profit is real. ZC recently mentioned in an interview that he earned $1 billion in his first year of trading contracts, with all net profit coming from transaction fees. Back then, exchanges weren't as abundant as they are now. Michael mentioned that exchanges are now so plentiful that many of my former colleagues who wanted to enter the crypto VC and crypto asset management industries have nowhere to go. Now, after several cycles, people realize how difficult it is for me as an asset manager to compete with exchanges. Exchanges have built-in wealth management and IPO subscription features directly into their products and apps.